Hi, welcome to today's session or episode where we are going to enter formulas to generate the revenue or credit entries, right? So for the credit entries, we know we have revenue. It has a credit balance. Basically, for transactions, we only have revenue as a credit balance. So what we are going to do is that we are still going to use our sum ifs, and we can choose to use what we used for the debit, or we can enter it all afresh. But for the purposes for you to follow, I'm going to enter everything all afresh. So this is how it's going to be. So sum ifs. Now we know for credit entry for the cash books, it is going to be on the debit side. So the sum range is going to be on the debit side of the cash book. We are beginning with CB1. Now, the criteria range, the first one is going to be the item or the subclassification, and the criteria is going to be as usual, whatever we have over here, and we are going to lock it at the column side. Let us enlarge it. Once we are done, we are now going for the date. So we select the date as the criteria range, and the criteria, as we already know, it is going to be greater than or equal to, and our current date from, which is CFRM. Again, like I explained in the other formulas, what this tries to or what this seeks to achieve is that we are adding everything at the debit side, and we want only the ones which we can say we want to add anything that has consultation fee at the sub classification or the item section, and at the same time we want the one with the date not greater than, or the date which is greater than or equal to this one, and the date also less than or equal to this. So the first side is the date which is greater than or equal to this, and then the second one too, we are going to select the same date, and the criteria is going to be less than or equal to, and the current date too, which is CTO, right? So we are done with that. This is going to give us the summation for cash book 1. But that is not all. Remember that should it happen that there is a revenue which was reversed, it is going to appear in the cash book as a credit balance. So we need to factor that in. So what we are going to do now is to copy everything and enlarge it. But this time around, it is not going to be the debit side. The sum range is not going to be the debit, it is going to be the credit. It is going to be the credit side, and everything else remains the same. Okay, so we are done with it. We can test it in the cash book 1. Let's assume this one is a revenue. We need to change the side as well. It is a consultation fee, and let us change the date to 2021. Back to our reports. You see we have it at the credit side, sorry, which means that it is a reversal. If it is in the cash book and it's at the debit side, it means that we are receiving revenue, and if it's at the credit side, it means that, for instance, we've written off, or we've cancelled, or a debit entry has been reversed. For that matter, we need to also consider it in our report, right? So let us go back and then change it from credit to debit. Okay, you see now it is a positive one. Okay, so we are done with the first step. The next step is to repeat these same formulas from the cash book 1 up to the cash book 7 that we see over here. And this is something we did easily using the word, right? So I think that is a short form. But if you so prefer, we are going to do it one after the other and it's going to take a long time. So let us go to our document again, our Word document. Let us save it first. Let us save it as training Word Assistant. All right. So we can also use a short form by just copying the current expenses, the current expenses. And this time around, what we are going to do is that we are changing it to current revenue. So wherever we are going to see any addition, we are going to less it, and wherever we are going to see any deduction, we are going to add it. So here the credit side, it has to be negative, and where it is debit, it is rather positive, right? So here negative, here positive, here negative, here positive, here negative, here positive, here negative, here positive, here negative. Okay, so we are done with it. We are done with all of the changes. Okay, now remember that this one, the column, the row that we are linking to is 253. So let us go back, and here we have 270. So we need to change all of these to 253. No. Okay, so we can copy it and come and paste it here. All right, you see it is correctly linked. Let us check our journal entries to see if we are going to get it correct. So the date, let us make it maybe September 2021. The classification is revenue. So here it means that it has to be a credit balance. Let us assume that maybe current assets. For instance, should we have maybe deferred income? Let us add deferred income to our chart of accounts. Current asset. Okay. So our journal entry, deferred income. We are debiting it. Now deferred income should come under current liabilities instead. Apologies. Deferred income is a current liability transaction. So we need to change the side to current liabilities. Alright, so we are going to debit it maybe 15,000. And here, select our revenue. Well, alright, so I think this side should be linked to this. So let us go back to data, validation, indirect I. Alright, so this is it. So let us go back to our report. $15,000. What date did we use? September, sorry. 2021. Okay, so you see it has updated automatically. It has updated automatically, which means that our formula is working. The next thing to do is to drag it down and not forgetting our comparative year. Let us go back to our word. Now let us copy and paste it and name it comparative revenue. What we are going to change in here is wherever we have CTO, we are going to change it to COTO. And wherever we have CFRM, we are going to change it to COFRM. Replace all. Yes. No. Alright, so once we are done, we just copy everything. We come back and we paste it here. Then we drag it down. Okay, so here let us change the date to 2020. See if it is going to work. Alright, you see, so the 15,000 has moved from this side to this side. Okay, so our formulas are working. Now let us go through and then where there is the need where we see any expenses, we add it here. So for instance, cost of revenue is expense, and then we are going to copy from the administrative expenses and drag it down. Let us look for other expenses as well. So operating expenses, here I think there's a need for correction. This should be operating expenses. So let us link it to operating expenses. So other expenses, we have operating expenses, right? Let us save it and let us copy where we had the revenue, and wherever we see any revenue bearing transaction, something like other operating income, investment income, finance income. I think that is all. Then we add our formulas. I don't understand how we missed the side, but it is not too late. This one is going to be the revenue minus the cost of revenue, giving us our gross profit. We can copy here and add it to this side, the same as this side. And this one is going to be a summation of this plus this plus this plus this. I think that is all. Now this minus this. Alright, so for the expenses as well, we are going to copy this and bring it here. So we can try making entries for maybe other income. The date, let us set it at any 2021. So let us select other income. Okay, this one, let us select operating. Okay, finance income. So CB4. Let us change it to other income. Investment income. I think this is okay. CB2. CB2, let us use other income. Other operating income. Let us go to our report. See. Oh. So this should be just this, I think. This should also be just this. Oh, so for the investment, it rather selected 2024. Now for CB5, let us use other expenses, operating. CB6, other expenses, finance, and CB7. We are just testing our formulas, other expenses, and investment. So let us say 4,000. Back to our report. Oh, nice. Okay, so what this is telling us is that this should be this plus this minus all of these. This should also be this minus this. Now we can copy this and paste it here. So our formulas are working well, which is a good news. If we so prefer, we can make all of these be in bracket. Alright, so let us save it. Now let us move to our assets. I feel like let us move our cash book to the notes. I think this will make our presentation even far better. Alright. So let us come and insert it right after amortization or our intangible assets. And then we name it cash and bank account. So we are going to link it to our trial balance, our cash book. We drag it down. So all of these ones should be deleted. And in our cash books, let us delete up to this side and link it to the note. Alright. So for the cash books, what we are going to do is that it is going to be the sum of the debit entry minus the credit entries. So this is going to be CV1. I think should rather be some ifs. The sum range is going to be this. The criteria, it is going to be this is greater than, so greater than or equal to our CFRM and the same date. Our criteria is going to be less than or equal to NCTO Okay, so I think there should be a slight changes here. So it should rather be from the beginning, right? So from the past, PFRM, from the past to the current date, all right, should be as simple as that. Now we are going to do so. Let us send it to our word again. Let us send it to our word. So here we are going to just name it our cash balance, current, all right. So we've done the debit side. We need to less the credit side, right? So minus the same thing, but the only thing that is going to change is credit. Wow, we are good to go. So let us copy this one instead. Go to our word and insert it. So we are just going to add it up 7 times. Remember that for the cash balances, we can't have a journal entry because if there should be a journal entry, then it means that it should have been done outright. Any journal entries that affect the cash book should be done in the cash books. Otherwise, it is going to distort things. We have 1, 2, 3, 4, 5, 6, 7. Right? We have 1, 2, 3, 4, 5, 6, 7. All right. So we begin from CB1, CB2, finest, replace, 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 replace. Here it is going to be CB3. Here is 4. Here it is going to be 5. Here it is going to be 6. And here it is going to be 7. Okay. All right. So for the cash book 2, We come to this side and then we just paste it. Sorry. Let us copy the third one. This is the fourth one. The fifth one. The sixth one. Sorry. And then the last one, which is the seventh. So we are done with the balances, the cash balances. Now for the comparative year, we are going to copy all of these. For the comparative year, it is going to be the CT date has to change to COTO date. So this is the comparative. All right. So once we are done, let us copy each. Okay, so it is now taking form. We are done with the cash and bank balances. Now let us come to our PPE. So we need to get the opening balance. To get the opening balance, we need to add three things, which is first, all our purchases up to date, and it follows the debit format, right? So to give you an example, it is going to be sum ifs, the sum range is going to be the credit side, because if you are buying something, it means you will be paying, and in the cash book it would appear in the credit side, unless we bought it on credit, where we are going to see it in our journal, right? So don't let this confuse you. So this, and then the ranges, of course, the item is going to be linked to the property, plant and equipment, but then we are going to lock the column and the date as well. So please watch this. The next time we are not going to go through the processes again. We are going to use the word and then adjust some of the entries we've already made over there to prepare or to fix it in here. So the date, we already know that it should be greater than or equal to as this one. We are not going to use the current date. We are going to use when the offset. So onset, from onset. So we are going to use past PRF1, right? Then the same date, the criteria is going to be less than or equal to. So this time around, we want it to the current date, right? So to current 2 minus 1. The reason being that we want just the previous day before the current period. So for instance, when we see, for instance, what we have here, we have 1st January 2021, but we want all of the entries or transactions up to December 2020, 31st December 2020. That is why we subtracted the 1 from it. But bear in mind that this is just for it should have come down. So it is just for instance, for furniture and fittings. But if you want it for furniture and fitting just for cash book 1, but if you want it for all of the cash books, it means that you need to do everything, to repeat these formulas whilst changing the sheet names. So what we are going to do is that we are going to use word, and we are going to take one of the expenses, the current expenses. The current expenses. Let us copy everything. then bring it here as so here it is going to be opening assets. Now what we are going to do is, one, we are going to change the row reference. So this one is 209. So whatever we have here has to bear 209. What we have here is 270. So let us change everything to 209. Replace all. Yes. No. We are done with the first step. Now the second step is to change our date condition. So we want it from the onset. So CFRM, sorry, CFRM will change to PFRM. Then again, CTO will change to CFRM -1. Right? Then let us replace all. No. Now let us copy and come and insert it here. 209 is what we used. Okay. So let us drag it down. Let us make some entries here to see if it is going to work correctly. So let us assume this is an opening balance. Asset has a debit balance. So we are going to debit it, PPE. Let's say motor vehicle, computer and accessories. We are debiting it, and then the credit entry, we take it to equity as opening balance. All right. So to our reporting, right, I think the date, let us use maybe 1st January 2015. So our report, it is going to be first, it is going to be this way, but then most of our opening balances, we are going to use 1st January. Ideally, on 1st January, no transactions occur. So I think for this formula, let us remove all of the -1 from it. I hope you get it. or should we maintain it as such? All right, let us do it as such. So then what it means is that any transactions taking place on 1st January is going to be nullified. We are going to send it. All transactions begin from 2nd January 2020, whatever it may be. Okay, so for the depreciation, let us go back and remove all of the minus 1 we have over here. So for comparative, for the opening balances,